What is going on Instagram Live? It's Denise, your favorite mortgage nerd. Almost forgot my glasses. Anyways, I just had a real estate agent send me a text message and they said, I've got a client, they're coming in from California and they've got $250,000 cash. They want to buy a rental property. Should they do that? And my first question was, why would you dump all of that cash into one rental property? And so I thought this would be a great video. There's a lot of us right now that want to leverage the market. I think there's a term that is not talked about enough, and it's called financial leverage. And the Dave Ramseys of the world, they don't really talk about this because their philosophy is to pay your debt off as quick as possible. But you can actually leverage really cheap interest money that's also tax deductible and make yourself more money through a term called financial leverage. It just requires one, financial discipline, and two, strategy. So here's what I told her. If you bought a $250,000 rental property here in the DFW area, and instead of paying cash, you put 25% down so you can get a good interest rate, that would be about $62,500 that you would put for a down payment. And let's just say, based on the annual average 4% real estate appreciation, and I'm not including any other benefits of being an investor or a landlord, like tax write-offs. You can write off all the maintenance stuff, the interest write-offs. I'm not even talking about how the principal gets paid every single month. I'm only talking about the annual appreciation of, you buy this calculator today and it's worth more tomorrow. So you buy a house today, on average in DFW, there's a 4% appreciation. So that's $10,000 that you would make in 1 year. Well, instead of taking $250,000 and putting it all down into one asset, what if you take that $250,000, you buy 4 assets and you make $10,000 a year times 4, that's $40,000 a year. Now you're leveraging the bank's money, which is again a write-off, that you have 4 assets accumulating you wealth versus just one. So if you have thought about buying homes, becoming a landlord, I know it can be scary, but if any of y'all know my story, I bought my first house when I was 25, single. I could hardly screw a light bulb in, and I turned it into a rental. I had no idea what I was doing, and I still have that house, and I still don't know that much of what I'm doing, but I can pay someone to fix the garbage disposal if I need to. It's not as scary as people think. And, you're going to see all the horror stories online because unfortunately that's what people tune into. But don't be afraid to add real estate to your portfolio. It's something that I love to talk to people about, especially these millennials who are being really smart and strategic. You've got to have a good financial advisor and mortgage partner working together to guide you in the direction. And if you don't have your squad and you need your team, give me a call. I work with the very best financial advisors, real estate agents, CPAs, and we can be your financial squad and help you out. So holla at your nerd if you need me. All right, take care.